Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, December 22nd, 2008. Well, as we get into today's intraday video, folks, I want to cover a couple different odds and ends. Number one, I want to talk about the intraday market, what's happening today in the markets. I also want to cover the hardcore technicals of the situational market candles here in the intraday 10-minute, 60-minute, 120, and 180-minute charts. So we're going to flip time frames here to give ourselves a better view of what the overall market is doing. Now, a couple odds and ends, folks. First of all, we saw last week the markets being mixed. For the most part, it was generally a flat to positive week, I guess you could say. But the general trend of this market right now is very weak. I mean, we're seeing that on these light volume days that the market is having more profit takers and more sellers here into the close than what we're seeing across the board on a possible Santa Claus rally scenario. All right, we are not seeing that Santa Claus scenario. And what I would like to point out is that a lot of people were calling for that, and generally what we like to say on our intraday videos, on our daily videos, on our hardcore research center that those of you that want to join can join, that when everyone's calling for a Santa Claus rally, a lot of times it does not happen. So keep that in mind, guys. Now, what I want to show you here, first of all, is the intraday SPY as we trade near the lows of the day. The Dow is, let's get a quote on the Dow here. The Dow is trading lower by about 83.5 points, down just about 1%. The NASDAQ is a lot weaker today, trading down 42 points or 2.66%, and the S&P is down about 17 points or 1.9% on the day. Now, the key here, folks, is a couple different things. Number one, we're seeing some trends develop here over the Friday period through today. We're going to cover those shortly. And there's some other key factors in the market that I want to discuss as well. Number one, people are still very worried about retail sales in this market, and that's something to be remembered into the holiday, the Christmas holiday, the Hanukkah holiday, and the New Year. All right, a lot of these retailers are still showing a lot of weakness now. The other thing I'd like to point out is Toyota. Toyota reporting that they'll take their first loss since 1941. And that's just showing you how bad the auto market is right now. Even though the auto companies got the bailout last year, it's not helping. Let's look at GM. GM getting crushed today. Look at on Friday after that bailout, it traded up to a high of 450. It's basically reversed that whole level on the intraday. You're looking at the intraday GM, by the way, and has actually closed the whole gap. I mean, look at this. How amazing is that? You basically gave up everything you had on Friday on the bailout and are now trading at gap fill areas. Look at that. Right where it was before the bailout was announced here, and you can see the trading on Friday, and we're right back down to where it was prior to that bailout happening. And that's an insignificant move, guys. I mean, don't forget, you're basically wiping out that whole bailout scenario spike in the stock, and a lot of people got caught off guard, and that's what we preach. We do not trade on news. We do not trade on fundamentals. We trade on pure technicals because you get rid of all that junk, all that research, all that fundamental research is nonsense when you talk about charts, because those of you that were with us, obviously looking at the daily chart, you can see this is not a healthy chart pattern on the daily GM. Look at the 50 moving average moving down into current price. GM barely holding on to the 20 moving average, and you can see it spiking down on the daily today, and that's not a healthy pattern. Now, it could develop into a healthy pattern, but it needs to take out this 50 moving average to the upside first. Then we can talk about a healthy move up in the stock, but it couldn't do that on Friday. Thus, you have to realize that and take that into account, okay? So GM, Ford getting taken down a notch today on Toyota. Walgreens disappointed on earnings and their outlook today as well. That's a retailer. And that's really the essence of this market, as the NASDAQ is down about 42 points currently. Volume in this market extremely light. All right, only 650,000 contracts, and it's after 2 p.m. Eastern time. By this point on a normal day, we should be doing about 2 million contracts, and we've only done 650,000. So it shows you the lightness in this market. What that generally means is the market can be pushed very easily one way or the other. Sure enough, today's a down day in the markets. Now, those of you in the Research Center know what our bias was for the day and for this next coming week, and we're going to stick by that. And you guys that aren't part of the Research Center, if you want to know what our projections are showing for the next couple days leading into the new year, can obviously join the Research Center as well. Also, we have a webinar coming up where we teach these technicals to you guys. We do encourage you to join. The in-depth technical analysis that you'll learn is just second to none in that webinar. So go to InTheMoneyStocks.com and join that as well. Now, I want to talk a little bit more about the intraday SPY. Let's go back to that chart on the intraday, and I want to show you a few odds and ends. First of all, take a note of this, guys. Oops, let me erase that. Number one, you have a channel developing here, okay? See this? you can take the high from Friday's high on this market and drag it and hit the high of that candle and that candle, drag it all the way down, and you basically have the top on this market. In addition, you can really take the highs as well from this area and draw it as well to the downside. So notice how you're having these keys in the market and you drag it down, you're going to notice how these continue to piercing here, 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 and actually just intraday as we speak, piercing here again. So this line is showing us decent support. There's a couple other key levels I want to point out as well. Number one, if you take this line here, folks, and draw it straight through on Friday, look at how it comes into play today. Alright, number one, we had the low from Thursday. Here's the low Friday. Friday closing really right on this line. The market gapped a little higher only to close below. You get a close below in confirmation, you have to expect more downside. We talk about confirmation in all our videos in the Research Center and on the free ones as well here. And you can see you get confirmation, that means the market's going to go lower. It broke this level, you got confirmation. Alright, finally we get confirmation and the market starts to sink. You go down to this line here, and again, you can just draw the lines from the opening high here through, and you'll get the lows. Of course, there's a couple calculations as well that goes in. Bounce off that level here, bounce off that level again, and then here as well. Alright, notice how the 20 moving average right here is acting like that, as well as up here on this print up here as well. So just keep in mind, there's a bunch of different factors in this market that are very, very key to understanding the technicals. Now I want to erase these lines and go to the 60-minute, and let's take another look at a wider time frame. Alright, so flip out to the 60-minute and spike it up to the 60-minute here. And there we go. Now what you're seeing here, folks, is a beautiful symmetry on the chart. Notice right here, you have topping, double top on the 60-minute chart. Dead signal to be very cautious up here as we were. Alright? And that's the key, folks. Notice that. If you're a technical person, or even if you're not, there's no deniability that there's resistance here. Sure enough, you came all the way down, you fought all the way back up, you bounced off here, came back in, hit it again, you couldn't break it. Even though you got above intra-candle, you never closed above this level. That's a sell signal to anyone that follows these charts. And look at the fall you've had off of that. Notice how the fall came all the way down to this support line. Alright? There. So you have this support put in right here, this consolidation. Consolidation can signal support. Obviously it does here before you broke out on the Fed. This was the Fed day last week. You pulled back, came up. When you're coming down, where are you going to look for support? Right at that consolidation pattern. So you pierce it, you bounce, pierce, bounce, bounce up here, pierce it again. Notice how you're having support here. Then finally you close below, get your confirmation, and the sell-off. Notice where the sell-off takes us into the 200 moving average on the intraday. Great support right here. We're piercing it currently as of now. Notice also, look at this, guys. How perfect is that? And you take this support line right from down here, we're piercing it as well as the 200 moving average. You could even extend this support to show it extending out even further over here. Alright, there we go. So you have the support over here as well. You have notice the gap down, but you recaptured that support line. That means that support line's intact over on this day. You trade above it, you trade down, hit it again, bounce all the way up, then you're coming back down and you're piercing it now. Now if we were to break that, then I'd start to look for minor support in this range, obviously, and you guys can calculate on your own or come to the Research Center and do it for yourself, but nonetheless, we'll do it for you in the Research Center and tell you all the little ins and outs about our projections. We don't know if it's going to go down here. That's for the Research Center people to know if we believe it's going down or are we going to get a bounce off of here. If we get a bounce off, you obviously have a lot of levels up here that I can draw in as well that are possible bounce play areas for resistance, and I'm just going to draw in a bunch of them all the way up. So these are all different levels. The question is, which way is it going to go? Is it going to go up here? Draw my little pseudo arrow here, or are we going to head back down here? And again, that I stress is for those in the Research Center to know what our projections are, or to join the webinar coming on January 3rd, Saturday, and we'll teach you how to know about this stuff as well, whether or not to be a short the market or be long the market for a bounce. Okay, a couple other odds and ends. I want to expand it to even the 120 and then the 180 quickly. Alright, we'll have to take away these lines. You can still see them in there, though. They stay in there, which is kind of nice. And we'll erase some of these here as well. There we go. And a couple other odds and ends, folks, I want to just make everyone clear on. So you have your support and resistance, but I want to also draw these lines in. I mean, there's just so many lines of technical support as well. This was a breakdown line. Notice how it was right there at a support line as well. Alright, you can draw the lows in all the way up. You had a support line right here. You see we finally broke down off of that. Just scanning through, you also had a gap fill right in that range as well. Notice how one of those lines coincides right with that gap fill from this point. There's just so many things to do on this. I do encourage you all to come and join as we trade down in this market, especially in this lighter volume scenario. This is the time to learn, and I want to really encourage you to do that. All right, folks, and just again going into the markets, what the markets are currently doing, we are trading. Let's see here. NASDAQ trading down 47 points. The Dow is now down 121, and the S&P down 22. So a good solid sell-off here on very, very light volume. And again, the question will be is, do we bounce from here? Do we move up into the close? We'll reanalyze all this and give you key levels in the Research Center today. And again, we'll teach you all how to do this in the webinar. Have a wonderful day, guys. Hope you learned something. And again, be careful in these markets, the light volume. Have a wonderful, wonderful holiday. And we'll be back with tomorrow's video intraday around 2 o'clock again. Take care.